Benjamin Franklin once said, "An investment in knowledge pays the best interest." Without a doubt, 2022 was a stark reminder of the stock market's unpredictability, with uneducated investors bearing the brunt of its volatility and suffering the most substantial losses. When it comes to investing in the stock market, it can seem overwhelming, especially if you're new to it. But don't worry, because we've got you covered. In this video, we'll provide you with a clear and concise step-by-step beginner's guide on how to invest in stocks. We won't waste your time with confusing jargon or irrelevant information, but rather focus on what you need to know to get started. By the end of this video, you'll have a solid understanding of the basics of investing and be ready to take the first step towards securing your financial future. So, let's dive in. Have you ever wondered why some people are always talking about investing in stocks? It's because owning stocks means owning a piece of business. But what exactly is a stock, and why is it important to invest in one? First things first, let's define what a stock is. Simply put, a stock represents ownership in a business. When a business wants to raise money, they can sell stocks to the public on the stock market. Each stock represents a small portion of the business, and this portion is called a share. So if you own one stock of a company, you own a tiny slice of that company. But why would someone want to own a stock? Well, the answer lies in the fact that businesses exist to make money. While they may have other goals like serving customers or making a positive difference in the world, the bottom line is that the true purpose of a business is to generate profit. When you buy a stock, you become a business owner and have the opportunity to share in those profits. One of the best things about owning stocks is that it can provide passive income. Unlike a traditional job where you have to work for every dollar you earn, owning stocks means that you can make money even while you're sleeping, lounging on the beach, or doing something else you enjoy. This is why investing in stocks is often referred to as a passive income. So, how can you get started with investing in stocks? Know that you don't need to be a millionaire to get started. In fact, the stock market is affordable to everyone. For instance, you can buy a stock block in Disney for $90, Coca-Cola for $60, and Apple for $140. The key is to know the right steps to take to get started. First, you'll need to find a stockbroker. A brokerage company is a platform that enables you to buy and sell stocks. Fortunately, you don't need a dodgy broker from Wall Street to do your trades, because there are many reputable and established brokerage companies out there. If you're looking for a cheap option and just starting your investing journey, you could consider Robinhood, Webull, or SoFi. These companies offer free buying and selling of stocks. However, if you have a bit more money and you're looking for a platform that's been around for a long time, you can check out companies like Charles Schwab, Fidelity, or TD Ameritrade. Signing up for these brokerage companies is pretty easy and straightforward. Just Google them, visit their website, and fill out a form or two. With step 1 completed, you now have a stockbroker and you're ready to invest in stocks. Now, there are basic stockbroker mechanics you should know. Once you have a stockbroker, you want to familiarize yourself with a couple of terms before buying a stock. There are 3 key terms you should know. One is a ticker symbol. A ticker symbol for a stock is a kind of like a stock's nickname. It's an easy way to find the stock you're looking for. For example, Amazon's ticker symbol is AMZN, Microsoft is MSFT, Disney is DIS. Once you've clicked on the stock you potentially want to buy, there are 2 key buy orders you can implement. One is a market order. This is when you place an order to buy or sell a stock at the market's current best available price. A market order generally ensures that you will buy the stock, but it does not guarantee a specified price. Second, you've got the limit order. A limit order is an order to buy or sell a stock with a restriction on the maximum price to be paid. If the order is filled, it will only be at the specified limit price or lower than the price. Next up, let's talk about sectors to invest in. Understanding the 11 different sectors of the economy and which ones may perform best can help guide your investment decisions. One is the technology sector, which includes some of the biggest companies in the world, such as Apple and Microsoft, and continues to grow rapidly. 2 is the financial sector, which includes banks like JP Morgan and Wells Fargo, as well as insurance companies like AIG and Chubb. Can be a solid investment as well. 3 is the communication services sector, which includes companies like Google and T-Mobile. 4 is the consumer cyclical sector, which includes non-essential goods such as Amazon and Tesla. And 5 is the consumer defensive sector, which includes essential items like food and beverage, with Walmart and Costco as examples. The communication services, consumer cyclical, and consumer defense are all sectors that focus on different aspects of consumer behavior. The healthcare sector is another crucial sector, with companies that produce medical devices, pharmaceuticals, and provide healthcare services. 7 is the industrial sector that includes companies that aid in manufacturing, shipping, and producing products, such as Boeing. Real estate, energy, basic materials, and utility sectors round out the 11 key sectors of the economy. With that being said, taking a closer look at these sectors and assessing which ones may perform best in the coming years can help you make informed investment decisions. Building a diverse portfolio in sectors that make sense to you and align with your investment goals can help increase your chances of success. Right before you go ahead to buy stocks, I need you to pay close attention for the next few seconds. Now, when considering buying a stock, it's essential to understand that a stock represents a business. So, before purchasing, it's crucial to conduct thorough research. For instance, when buying Apple shares, it's essential to comprehend their revenue streams, such as wearables, Macs, iPhones, and services like Apple Pay, iCloud, and Apple TV. To evaluate the potential future of these segments, ask yourself questions as a business owner. Look at consumer behavior and what your friends are buying, and what companies benefit from their interests. Instead of fixating on politics, focus on business knowledge to benefit your investments and net worth. Don't be afraid to engage in conversations about stock value and future business performance. Then start modestly by purchasing stocks. Invest a small amount of money to get your feet wet and gradually transition to passive index fund investing. No doubt, understanding business is crucial to making informed investment decisions and reaping the rewards in life. That should give you a good overall idea of how to get started, so why not give it a try and see where it takes you. Thanks for watching, and see you in the next video.